When your money's out there making money for you and it's paying you a return, it opens up a lot to you. Travel, time with children, time with grandchildren, time on the golf course. What you're really trying to get to is an environment where your money is making you money, probably while you're still making money. Okay, well, look, my mission is to actually help people do what I could not have done myself originally. So we spent a long time working. I was a complete workaholic. The first 3 years of our own business, we never had a day off. And ultimately, I kind of worked myself into a corner. And when we started making money and trying to figure out what to do with it, which nobody was teaching us how to do that, by the way, we really got into a situation where we're like, what else can we do to provide for a life that is outside of an office?
We sold our company back in May of 2023. And when we got our payout from that company, we're like, we have this set amount of money. Now we have to make sure that that money's making us money. We're like, we look great on paper. We have a high net worth. The last time I went to my refrigerator, I couldn't eat net worth. When we're lending out money to individuals that are fixing and flipping homes, they are actually providing the lifeblood for us to actually live on. And it'll be the same exact way for you.
At the Wealth Mission Group, my favorite thing to ask is, what is your wealth mission? We can ask kind of what your big dreams are if you won the lottery, but what is your wealth mission? Because that is truly obtainable.
We're going to provide you with consistent monthly cash flow, ACH'd every single month right into your bank account. We used to call that mailbox money, but nobody mails money anymore. You actually get it electronically transferred right into your bank account. So you can count on it like clockwork.
We are the bank instead of just being someone who owns the property and has to wait for it to sell in order to get our return. The bank always makes the money. So we take funds from investors, pool it together, and serve as a private lender to experienced real estate operators, including fix and flippers, small developers, and repurposers of commercial real estate. We don't buy the projects, we fund them.
We're able to bring not only something that is about passive income or appreciation, but something that can bring more money to your pockets monthly and more consistently. If you have a portfolio that is lacking in cash flow, this is the missing puzzle piece that is designed to deliver that consistent monthly income.
If time and money was not a concern, what would you be doing? And those are the things that people really want out of their life. It's just we all get bogged down with what we have to do and forget what we want to do. And really what we all want is a mission to give back, to provide, to leave a legacy. Those are things that we want to be known for. If you're looking to discover the best way for your wealth to be on a mission, let's have a conversation.
Here's our team. So far to date, we've placed over $93 million in capital in assets, some of them being trailer park communities, mobile home parks, if you will, self-storage. We do multifamily apartment buildings. We own gas stations. We own warehouses. We own a lot of buildings. To date, with all the assets that we have under our roof, we have a little over $2.3 billion with a B dollars of assets under management, over 13,000 doors in the apartment space, over 49 properties, and 60% of our investors repeat over and over again. They trust us in what we're doing. We are the Wealth Mission Group. Maria Marks is to my left on the screen. I am Michael Guthrie, and my beautiful wife, Samantha Guthrie, is on the right. Our portal that we use today is Cashflow portal for all of our reporting. All of our documents are housed there. That's where you'll see your wealth mission statements on a monthly basis on the amount of money you've invested versus how much we've distributed to you. And it'll also show you the loan to value of the properties that we are buying, or not buying, actually lending on, that are in your portfolio. Provision is our CPA firm. L. Smith is our securities attorney out of Tucson. They've taken care of us to make sure that we have dotted our I's and crossed our T's so that you are protected, and so are we. So what's your money doing for you? This is me and my wife on a typical weekend away or a trip. This happened to be a dinner. We were at the Versace Mansion in Miami, Florida last December. And let's face it, we can't afford to go do these things without cash flow. All of our money that we earn today comes through passive income. A good chunk of it today actually comes through hard money lending, which is what we're here to talk about this evening. So we all want income that is consistent and predictable, secured and backed by assets. And when we say secured and backed by assets, the loans we are doing, we are not loaning more than 75% loan to cost. And that when I loan to cost, that's not loan to what the property's worth. That is loan to what that fix and flipper or that repurposer is buying it for. So our assets are inflation resistance because we are the lender, low risks, no boom or busts, and we are independent from public market. And we don't rely on when the fix and flipper needs to sell, when the apartment building's IRR goes to the moon. And I was having a meeting this morning with a gentleman. He's like, you should invest some of your money with us. We have a 19% IRR and a 9% preferred rate of return. And I go, tell me about the apartment building you bought in 2021, in 2022. Tell me what that IRR is today. He's like, that was an anomaly. I go, I was in that position myself. I was there with people investing and bringing investors along with us at that exact point in time. IRR doesn't mean anything. Cash in your pocket, cash on cash deposits on a monthly basis are where we're at. Here's the harsh reality of an open market. You need a predictable vehicle in your portfolio. Lending is a predictable vehicle. That's why banks don't buy stocks. Banks lend money on hard assets. Stock markets go through cyclical booms, just like self-storage, just like mobile home parks, just like the new big boom, our luxury RV parks. I got pitched on that today too. Luxury RV parks, we're doing it different. And my IRR could be whatever. I don't care what your IRR is. I care what comes into my bank account monthly. And like most family offices and RIAs, when they have something that they need to return to their investors on a regular basis, they lend the money. Have you ever felt like this? I'm successful, but I'm tired. You're not alone. High performers often do not crash. They boil slowly, just like the frog in the water pile. You take time off, your income stops. I'm successful, but I'm tired. I have big paydays, but I have no peace. I have big paper net worth, but I have no liquidity. I have a big life, but I have no room to breathe. We see it every day, and that's why we built this solution for it. So you could get paid every single day without worrying about whether your money's going to come in or not. Big
Thanks,
pay.
Mike. I'm going to take it over here. And this is my favorite thing to think because you work so hard and your income stops when you do. So let's get real for a second. You're closing deals, you're chasing bonuses, and you're living that commission life. But what happens when you slow down? And what happens if the market does? Your income stops. You have bills to pay, your lifestyle doesn't stop, your stress doesn't stop. But on paper, we all look successful. You've got those big paydays. You've got the potential. And behind the scenes, it's like a roller coaster. We're bonus based and burnt out. There's no liquidity. There's no peace of mind. It's like a hamster wheel of a hustle. It's time we stop measuring success by how much we earn and start focusing on how we're earning our money. It's a huge shift that we need to start focusing on. So let's shift our mindsets here. I want you to really hold on to this. If you work hard for your income, can start working hard for you. So let's talk about that again. If you're working hard for your money, you're really putting in all that effort, why can't your money work just as hard as you? Passive income isn't just for the ultra wealthy anymore. It's for everyone who's willing to be intentional with how they want to invest. You don't have to swing a hammer, manage a property to earn from real estate. You just need to know the right people, the right deal, and the right strategy. We're here to help you learn how to leverage your high earnings and making sure that just lasts through that financial momentum. Because financial freedom comes when your money starts making money for you when you're off the clock. Because if you're sleeping, your money should still be making money for you. Okay, imagine if you had a commission check. Imagine one for you, and you paid yourself like that commission check again next month, and then again the month after that, and again the month after that. Wouldn't that be wonderful if you started to think of those checks like a business? Instead of spending every dollar, set aside a portion to invest in something that could create monthly cash flow. Let your income buy back your time. What would it take for you to spend one weekend completely off each month? Like unplugged, not working, not anything, and not to stress about what would happen if you weren't working. What would that actually do for you? That's your first milestone. And then we can work on taking off a complete month of work, see what that would do for you. But we'll start with a weekend and see what that would do. But that's the shift that you could be taking if you're actually investing your time and money in right things that can help you get cash flow instead of working on just those commissions. And these are my favorite income buckets. There's 3 income buckets that the most financially secure people are all filling all 3 of them. An active income, that's your job, your commissions, your day-to-day grind. Number 2 is that passive cash flow. That's that income that shows up whether you're working or whether you're not. It's like a monthly distribution, like the lending fund. That bucket 3 is that long-term wealth, and that's ownership in large assets like multifamily, self-storage, that these grow over time. But here's the key. If you're only in bucket 1, you're always working. But the moment you start filling bucket 2, your time becomes more valuable. And then eventually bucket 3 will give you that financial freedom to step completely away. And that's what you want to work for, is to get money in all 3. And then maybe you can step back and not have that active income because your other buckets are paying you when you're not working. That's what we want. And that's what everyone else is already achieving. Why can't you do that too? So how it works, it's very simple. We're not reinventing finance. We're not doing something that no one else is doing. We're really doing what all the banks are doing. And like I said, super simple. You invest in the WMG Cashflow Fund. That fund lends money secured by real estate to experienced investors buying or fixing properties. They pay interest. We distribute that interest to you, paid back monthly. You're the first position. That means that in the rare case that they default, the property is sold and your capital is protected first. We're not Wall Street, so it's not riding the stock market waves or those big booms or busts that Mike was talking about earlier. It's simple, it's secured, and it's designed with you in mind. You've earned this money. Now it's time for that money to earn it back for you.
So how it works, you get paid first. You invest with us into the WMG cash flow fund. We aggregate those dollars together. We underwrite, vet our debtors in the asset. First in capital is first capital back out into the property in the first lien position. WMG will manage, report, and distribute that money on a monthly basis. And that's how you end up getting paid. And I wanted to back up to the 3 buckets that Maria was talking about, because those are so important. You have your active, your passive, and your long-term, 1, 2, and 3. Most people have number 1 with their job, and they have number 3 with their 401k, but everybody wants bucket number 2. Everybody wants bucket number 2 because we're all in those other 2, and bucket 2 is the bridge where financial freedom actually lies. So we are the investors. We are the capital base. There's no outside debt. There's no mezzanine layers. We're not borrowing any additional money from an outside source to fund these deals. We are using your and our capital to secure this debt in an instrument. We are not buying equity. We are lending on that property. We're the borrower. And when the borrower pays interest, it flows to the fund. Then as the investors, the fund flows to you as distributions. And just in case there's a default, the fund takes the asset and recovers the principal before anyone else. I think we've spoke about this a little bit already, but we want to make sure that you're aware that this is a simple process. We are not trying to make this difficult. We apply the KISS principle to almost everything we do. We want to keep it simple, and we want to drive home the fact that these assets are backed by investments like a real fund, but we're not buying them, we're lending on them. The passive income comes from the interest paid on the property, not us managing the property, excelling rents, or doing anything of that amount or protection. We also have built-in protection because we're only lending 75% loan to cost, not loan to value, but loan to cost. So there's margin already in that investment in case anything goes wrong. So here's our 3 tiers of investment where you can get paid monthly. We have a 12-month lockup period, and then it's your choice at the end of the 12 months to roll over or redeem with a 60-day notice. If you were to place $50,000 to $249,000 with us, you will get an 8% cash-on-cash return starting within 90 days of you deploying the capital to us, because we typically will take up to 60 days to get it out into the field and working. Right now, we're down to about $1.5 million of a tranche we're trying to get in before the 14th of June to fund a couple deals that are on our desk that are looking for funding. So money coming in immediately will actually get deployed immediately. We also, if you want to deploy $250,000 to $499,000, you will receive a 9% cash on cash return. And for those of you that want the big return, $500,000 will get you a 10% cash on cash return. And we have investors that are actually doing that. So here's the page that everybody really wants to see, is the earning matrix and how that actually works. So we're actually putting numbers to dollar amounts. If you put in a $50,000 investment at 8%, that will return to you $4,000 a year or $333 a month. If you come in the middle of a month and your money's not deployed until, say, the 10th, it will be prorated for that first month, but then it will go on a month-to-month basis following that. Similar to if you put $250,000 into our deal at a 9% return, you will get $22,500 a year in return, or $1,875 a month. And you can see the rest of them on your screen. I know we're all brilliant people here. I don't need to read through all of them. Just decide where you'd like to come in at. Before we go to the next slide, I'm already at the next slide, but I wanted to mention something. Say you came in today at $100,000 investment and you got that bonus check down the road and you wanted to move your investment from 100 and you wanted to add another 150 to it. All of your money would then move to the $250,000 block. It is not if every time you put in money where that money lands, it's your overall investment on where you're making money on your tier. So picture this. Last quarter, you made $100,000 and you had an additional $50K from your commissions left over from after you pay all your bills over that 3-month period. You had 50 grand left over as your commission to yourself that you got to keep. You could put that with us and start earning $333 a month every single month without ever having to add any more money. And that will just go on and on. That's a weekend getaway. It's a full cart of groceries. It's one less deal you have to close because now your money's working for you, so you don't have to. Imagine skipping that grind and not feeling it in your bank account. Say you wanted to take a week off, you didn't have to make that extra commission. You could do this. The more investment you have in our fund, you could take more time off and you're not going to feel the pain in your bank account because these lending funds continue to make money every single month. So you work hard for your money should work hard for you. Big checks are great. Predictable paychecks are even better. You've earned it the hard way. Now put it to work and start earning the smart way. A commission pays you active today, but can pay you passive income for a very long time. You deserve more than the grind. You deserve growth. And with that, we're open to take any questions you might have. If you have an interest in investing in our fund, there is a QR code here at the bottom left of the screen, and Maria and I are here to take your questions. You can type them in the chat or you can type them in the Q&A.
I have one for you, Mike. It's what is the general holding time of the loan, and is there a minimum hold time?
For the borrower, there is a minimum interest period of 6 months, but every loan we do is a 12-month loan. So every 12 months, that loan will, the money will renew in our fund. But most of these fix and flippers fix and flip the house within 9 to 10 months, but they have a minimum interest to us of 6, and the loans we write are for 12 months. If they need to go over that time period, they will pay us a little bit, another point on the loan, and they'll pay us a little bit extra in interest to carry that for a long time.
What if someone doesn't have the 50,000, only has a couple thousand? Are we locked in at the 50,000 as a minimum?
We are working with accredited investors only at this time. We'd be happy to have a conversation with you if you're an accredited investor on a case-by-case basis. You will get a follow-up to this, and you can add a link to book a call with myself or Maria, and we can have that conversation. Thanks for the question, Christine. Can you just leave funds in the account instead of taking a monthly payout? We are not set up right now, Amanda, to do an accrual basis and accrual interest, because if you put $50,000 in, it's hard to loan out $333 extra dollars. So we would rather pay you and let you put that in your savings and start to grow that again, so then you can get to the amount to come back in with additional investment. After you have your $50,000 in, we can have conversations if you want to come in and say another $5,000 increment or another 10,000 or something of that nature. But our baseline right now is at the 50.
Can you talk about the win structure and how much we're lending to the borrowers?
So for the borrowers, we're loaning the money out to the borrowers at 12.5% interest and a point to them. And the reason we call it our win is because the borrower can typically, in this market, and a gentleman asked this question a week ago, that they were doing these loans and they're collecting 3 points on the front. They're loaning it at 15%, and it's really sticking it to the borrower. So we loan to the borrower at a point on the front and 12.5% interest, and then we make the spread. So the first win is for the borrower. They're not paying 15% and 3 or 4 points to borrow the money. The second win is for you, the investor. You're making your return because they're getting a good product and they're able to make their payments. And then we're getting a win because we've been able to put this program together and actually help everybody. So we all get the win. So we have win-win all the way around.
How do we know exactly what asset we are deploying our funds to?
We will not give you the exact address of the property we're deploying the funds to, and we are only deploying funds in Arizona. If I was to give you the address, I could see it now. I could see you down there with your camera taking selfies, or talking to the guy that's in there swinging the hammer, telling them you own the house because you lent the money to them. And I will give you the city and state you're in. We all know it's in Arizona. So we will give you the city of where the investment is, where your money's been lent to, so that you're aware of where it's actually gone out to. And we'll also let you know the date your money is funded, so you know when your interest actually starts.
But we will be giving monthly updates. We'll be giving just an understanding of how your money's doing, what's going on, just so that you know what is happening in the cash flow fund.
Absolutely. We'll say, this is how much money you've lent on this asset. what the value what the value was, what the value is, and what percentage of coverage we have for the debt.
How much do we loan out on each property?
We won't loan any more than 75% loan to cost.
What's
don't loan. Our average right now is right around $300,000 because the average home in Arizona, in Phoenix, is about $440,000 is the average home. If we were doing this in Scottsdale, the average home price in Scottsdale is $1.2 million. So if you do the math on the 75%, it would be 750, and then another two, that's another 150. So $800,000 would be the maximum loan on an average home that somebody's fixing and flipping in Scottsdale. Where if you get out to Gilbert, Queen Creek, where the average home prices are more in the $400,000 range, we're loaning 75% loan to that cost.
Do we get a K1 or a 1099 for what we are investing?
You will get we believe it's going to be a 1099. That's what our CPA has told us, called interest income. So that's how that works, but you're going to get paid every single month and the interest comes directly to you. So it's actually spendable money. It's not something that you think is growing over here, like we might be thinking in some of our other investments or some of our stock market where it's growing on paper, but we don't really see it until we actually cash it. You're going to get your interest on a monthly basis. And we try to take up about 20, 25 minutes of your time with the presentation, and then we'll go Q&A up to top of the hour. But if there is no questions, we're happy to cut it short to give you your time back with your family for the evening. So I'm happy to stay on at least another 3 minutes so we get to 5:30 Phoenix time and answer any questions you may have. You will get a follow-up text and an email when this webinar is over to sign up to get a copy of the webinar as we recorded it. So you'll get these Q&As answered again. And if you have any other questions, you can always respond to the email with any questions you might have. There will also be links to set up calls with me and Maria to go through any of the documentation that we require to join our fund. And we look forward to earning your business every single day. So if there's no questions, I'm going to give it about another minute and then we'll call it. We don't have to take up everybody's time this evening, but we truly appreciate you taking time out of your day on a Tuesday night to join us here at the Wealth Mission Group.
If there aren't any more, why don't you go to the next slide, Mike, and we'll see what's coming up. In 2 weeks, we've got why private lending is the most underrated wealth strategy in medicine. So that'll be a great one. We're very excited about this presentation. It is focused on a different type of group. So we were excited. If you are not in medicine, don't worry. You're still welcome to join. We're still going to be talking about why this fund is important. So we hope to see you there. And then we go to our next slide, which is really just showcasing the returns again, because we are so excited about what these percents could do to your monthly bank account. So hope you are noticing what that could do and how much that could actually change your monthly cash flow. So picture what that could do if you invest that today.
And we all know that leaving our money sitting at Chase, Bank of America, and Wells Fargo, although they're great financial institutions when you're traveling around the United States to get money out of, none of them are paying 8, 9, or 10% on your cash. I think the most you can get even at JP Morgan Chase, which is their private bank side, is right at 4%. So we're at our lowest tier. We're more than double what you can actually earn from a private bank. So having said that, I want to thank everybody again for coming tonight, and we are going to go ahead and close her down. Thanks again for coming. Appreciate you all.